You're listening to Market MakeHer, the self-directed investing education podcast designed to help you navigate the stock market and achieve financial empowerment from her perspective.
If you're new here, welcome. If you're not, welcome back. I'm Jess and Skip, your resident finance expert.
And I'm Jessie Dana Wee, here to make sure you actually understand what we're talking about and keep Jess out of financial jargon land.
Thank you. And today, we're doing something a little different than usual and introducing a new segment. We're going to talk about understanding what is happening in the stock market today and now.
We want you to understand how the market works, and that's why the last few episodes have been on the foundation, the basics of how the stock market works. But we also thought it would be important to tell you what's happening right now in the stock market world. So let's look at what's happening as of today, July 1st, 2023.
The big theme of the overall market is inflation. The Fed is actively trying to battle inflation. And anytime the Fed battles inflation, they do that by slowing down the economy. So that's really what we're getting a pulse on. So we need to really define all of those words and terminology and jargon that I started out with.
Yeah. So what are we talking about when we say the Fed?
They set monetary policy. Monetary policy is interest rates, the Fed funds rate. And the Fed funds rate is the rate at which banks borrow from each other. So they have like this amount of reserves that they're supposed to have at all times. So it's literally money policy or monetary policy.
So is the Fed part of the government?
They are not. They are private. They have two main functions. Function number one is price stability. When you are at the store and you feel that eggs and your groceries are suddenly more expensive than they were, they are charged with tackling that. But the second item they're charged with tackling, or their mandate, is employment. They're supposed to achieve price stability and also maintain really low unemployment levels.
How does the Fed do that?
Raising interest rates, that's the first and foremost, is they will control the interest rate policy. It starts with what they charge the banks, and then the banks will trickle that down to the consumer. And that's why it always is centered around the consumer, and that's what we're focused on. It will cost us more to get a loan. It will cost us more on our credit cards. It will cost more because it costs the banks more. That's the way that they constrain money.
Okay. So how does that affect the stock market?
The big issue is inflation. And one of the leading issues that have been identified for inflation is the labor market, meaning there are too many job openings, not enough people to fill those jobs. The Fed cannot print people. They can make money. They can put money into the market and they can take money away from the market. They can't fix supply issues. They can tackle demand by making it harder for you and I to access money. If it's harder for you and I to access money, we're less likely to spend it. If there is a supply issue, like in this case is a labor supply issue, there's not enough people to fill those jobs.
Right.
And then there also were supply issues during COVID because China shut down. Like we buy so many parts from China and that trickled down into goods inflation, which has gone down a lot. So now the focus is on services. You can only do so much. One person can only wait on so many tables.
Right.
You can only have so many
where
Yeah.
robots and AI come into place. Because I've seen a few restaurants here in Portland have those robot servers. Mm-hmm. So they like kind of help, they bring in the food to the table and like you can put your dishes away in them and things and they carry them off.
Absolutely. I didn't even plant this, and you said exactly what I was going to say. I love that. But that's where opportunities come in. So now this is what we're looking at with the stock market is economic data. What's happening with the unemployment rate? You can't get more people into the labor market. You could with immigration. That's one solution. But a way to bring balance back is productivity. If you can increase productivity, then you don't necessarily need as many people because you have robots bringing you food.
Right.
And that is what is happening in the market right now. AI stocks and anything within that technology field are literally propping up the entire market. So we know that the stock market, the major indices, right, they're market cap weighted. 26% of the S&P 500 is made up of technology. It's a huge portion.
Yeah.
So NASDAQ is rallying. The S&P 500 is rallying, not as much, but it still is, but it's propped up by tech.
So people who have like NASDAQ stocks are invested in, I don't know, NASDAQ ETFs, I guess, are probably doing well right now.
They are doing great. It's so interesting though. And I love how that you even just came to that conclusion on your own. The stock market is so around you. It's unbelievable. We just have to connect those dots. So if you feel plane tickets are suddenly more expensive, things are going up in prices, so are other people. So as far as monthly overview though, of how we're looking at the market, the labor market is what Fed Powell has a lens on. So since he has a lens on it, we have a lens on it. I did a deep dive into the labor market data, and the only concern that I see is he's like, oh my goodness, everything's great. It's cooling off is what we're calling it. Everything's back to where it was pre-pandemic level. People aren't switching jobs. Labor market participation is there. But if you look at labor market participation, it's not the same age group. 50 plus have exited the labor market. They have pieced out. They're taking cruises, they're traveling, which is why the cruise stocks are doing really good. It's 16 to 24 in prime age. They have made up pre-pandemic levels of labor market participation, which is 63%, which is a concern. That means that we could hit a wall, meaning Powell wants to see that trend to continue. Well, if the 50 plus aren't coming back, they're retired. Where's that labor supply going to come from?
Automation.
Exactly.
It's going to have to.
Exactly. Or immigration.
Yeah. Cool. They talk about unemployment rates a lot. And I mean, you want everyone to have jobs. So if everyone is able to get jobs, then you would think that consumer spending would go up. And at some point, interest rates would come down, or no? Is it the opposite?
So it depends on how you view the economic picture. What matters if you're looking at the stock market is what is the view of the person in control of monetary policy. And he is abundantly clear that he's what we call a hawk. He's hawkish. You would assign someone who is in charge of interest rates or of Fed policy or monetary policy as a hawk or a dove.
Oh.
You're a hawk.
Animals we have in the finance world.
That's so true. But a hawk means that they believe in raising interest rates, and that will attack it. Dovish is just lower. So hawks really, really high, doves fly low. That's how you remember.
I see.
Yeah.
So Powell is hawkish. He wants to raise interest rates because he thinks that will cut down on demand, right?
Yep.
And then that will trickle down to spending.
Cost.
And then
goods and services. Yeah.
Okay, cost. And then how does all of that affect the stock market in terms of value of stocks?
So normally when they have this restrictive policy, it makes the stock market go down.
So it goes to sale.
Yeah.
Okay.
Which is why we had those October lows. Is this all happened during the Fed raising interest rates? But then the market digested it because the market is all a perception of things. Because it's forward looking and people are always trying to figure out what price is worth 6 months from now. Like it's really a view of 6 months from now. If that's the case, the market digested what he said he's going to do, and now he's kind of stopped raising interest rates. It's technically in a bull market right now.
Okay, we have to explain what a bull market is and what a bear market is, because I think we all hear bullish, bearish, bull market, bear market, and we haven't explained what that is yet.
So true. So a bullish market just means up 20% from peak to trough, high to low. Bear market is down 20%. The definition just means you were at a high point and you moved down 20%. When you move down 20% and you don't overcome that 20% level, you are in a bear market. You're not in a new bull market until you move up 20%.
Okay, so it's always 20% is the percentage. So bull market is when we're up 20% from wherever it was at, right? And then if we're up 20% and then we come down 20%, then now we're in a bear market.
That's right. Yep.
Okay. We're in a bull market or we're going into a bull market?
We're in a bull market.
We're in a bull market because we're up 20% from where we were since last October?
Yeah, October was the low.
So this is all good to know. And then over time, this is how the stock market will fluctuate. Because even though we are bullish like market right now, if we don't continue to see improvements in immigration or automation, which, this is where immigration is where fiscal policy can affect the stock market, like we talked about in episode 2. And then what we're doing, how we're spending, jobs we're getting, if we're getting the raises we asked for, if not, we're leaving, going to other companies, or we're having our own side gigs, multiple income streams, and doing our own businesses and freelancing opportunities, things like that. That's all going to affect how things play out over time. And I'm curious to see in the next 10, 20 years how the stock market will shift overall, because if the younger generation spends differently, doesn't buy the same products the older generation did, we could see a shift in the companies that are the bigger players over time too.
Absolutely. Yeah. But yeah, that's what to pay attention to. There's going to be a labor market report next week. If you see more labor market participation, higher unemployment, enough would be good. Hate saying that, but I'm going to tell you what it will do to the markets. That is the way it works. That is all just indication of consumer health. And then we're very quickly going to get into earnings season, which is probably going to be really, really good.
Yeah.
And then that will make the stock market go up.
I guess I'm a little confused though, because I've been hearing throughout this year of all these big layoffs happening. I don't know, like Google, Apple, whatever. And you think that would affect the market in one way, but maybe it's not affecting it too badly because those people are just turning around and going into other jobs, or
it does affect
doing their own thing.
It didn't really show up in labor market data too much because unemployment numbers are measured if you apply for unemployment. So if you got a severance package from your big tech company, because those are really high paying jobs, you didn't apply for unemployment, and then you probably got another job. Right. So the restrictive Fed policy, which just means raising interest rates, normally hits the tech sector first. When a tech company announces layoffs, it actually makes their stock price go up because they have lower operating expenses, better profit margin, year of efficiency. And the reason why that they lay off first, though, is they have the ability to, because technology companies are innovating. So they could stop things that they're innovating on and just focus on day-to-day, stay alive. That's normally what happens. Like Facebook is a really good example. They invested a lot in the metaverse, and it hasn't come to fruition as quickly as they anticipated. So they laid off a lot of that and then reshifted focus to whatever he's focusing on right now.
Right.
Apparently it's a cage match with Elon Musk.
Celebrity death match. I'm like, oh, we're bringing that back, but it's not claymation this time.
Oh, Elon tweeted that it might be in the Coliseum.
Oh, wow. He would.
But yeah, so there were layoffs in Meta, though. They call it the year of efficiency for tech. And then there was higher ad spends over on Facebook on their previous earnings, and that made the stock go up. They were beating earnings based on cutting operating costs. But normally what happens is you can't cut cost faster than your sales are deteriorating. If you see sales go up, then you're like, oh, they're focusing on the right thing. That's good management.
We look at all of these things. We look at the gig economy, the job economy, like unemployment numbers, all of that, to try to predict a forward-looking future of what's going to happen in the stock market. But you really don't ever know. Things happen. Pandemics happen. Other products emerge and do better than the products that companies thought were going to do well. It's good for our listeners to know that we kind of use all these things to give us a gauge and to give give us an idea of the best strategy.
But it's all around the consumer. Every bit of it. All the economic data. Are people buying houses? Is there spending? Is there low unemployment? That's what we look at. How does that translate over to earnings? Microsoft said, hey, we just added $100 billion revenue stream because people love AI, and we have put that into Azure and their whole product suite. And then Adobe's Firefly, that really took off. People use it. People amplify it on social media. And
so is it too late to be investing in these tech companies that have AI or not?
I don't think so. But we need to talk about how to analyze a stock. I don't want anybody listening to this to go pull a trigger and start buying a bunch of stuff. It's at all-time highs right now.
Like me. Careful. I'm like, what do I buy? Tell me what to do.
But I will show you how to look for it. And I will show you how to have an investment thesis. That's very important.
Yeah, I need one. I don't have one.
You validate that investment thesis.
Well, that's it for our very first stock market update. Let us know if this is something you'd like us to keep doing or not by answering our poll on Spotify or leaving a comment on any of our social media channels. If you found our conversation today useful, don't keep it to yourself. Share our podcast with your friends, family, coworkers, and don't forget to rate us, leave a comment, and subscribe.
We appreciate every bit of feedback, and your support goes a long way in helping us empower people. And remember, when you build knowledge, you break barriers.
Remember, investing involves risk. There is always potential to lose money when investing in securities. Market MakeHer provides educational content and resources for informational purposes only. We are not registered financial advisors. For more information, visit marketmakeherpodcast.com.